Welcome to The Explainer. Today, we are digging into a fascinating company, IDEXX Laboratories. You might not know the name, but they are the absolute powerhouse in veterinary diagnostics. I mean, they're riding this huge wave in pet care. We're going to break down exactly what makes this business tick, why it's so dominant, and what you, as an investor, really need to be watching. All right, so here's how we're going to tackle this. First up, we'll hit the investment thesis head on. Then we'll look at their killer razor blade business model, explore the whole pet humanization wave that's fueling everything, and check out the numbers, the profitability. After that, we'll see what's next with their growth engines and wrap up with the stuff you should be keeping an eye on, the investor's watch list. Okay, first up, the investment thesis. So let's get straight to the point. If you're looking at IDEXX, what's the big idea? What's the core argument for putting your money here? So the whole thesis really boils down to this. IDEXX is what investors call a durable compounder. And what does that mean? Well, it's a fancy way of saying it's a super high-quality company that's built to just keep growing year after year. It's perfectly positioned to cash in on this massive trend of us treating our pets like family. The bottom line is, the company's competitive moat, it's so strong that it actually justifies why the stock costs a bit more. It's a premium company, and it has a premium price tag to match. All right, next up, the razor blade business model. So we just talked about that formidable competitive moat. How in the world do they build it? Well, it all comes down to a classic business model that they have absolutely perfected. You've probably heard of the razor and razor blade model, right? Sell the handle cheap to sell tons of expensive blades. Well, IDEXX has taken that playbook and just mastered it for the vet world. They put their high-tech diagnostic machines, those are the razors, into vet clinics. And once that machine is in there, the clinic is locked in. They have to buy the single-use tests and slides from IDEXX to make it run. And those are the razor blades. Super high margin, and they have to keep buying them again and again. And this creates this incredible feedback loop, a really powerful virtuous cycle. I mean, think about it. They place an analyzer, that leads directly to more sales of their consumables. That generates this beautiful, predictable, recurring revenue stream. But it gets even better. They wrap their software and services around it all. And suddenly, they're not just a supplier. They're woven into the very fabric of that clinic's day-to-day operations. Switching away, it becomes a massive, massive headache. They're just too sticky. And this chart, it shows you just how laser-focused this business really is. Almost everything, we're talking about 91%, comes from their companion animal group, or CAG. That's the part of the business that's running this whole razor/razor blade model. It's the engine, it's the crown jewel, it's where pretty much all the growth and profit comes from. It's the whole shebang, really. Okay, let's talk about the fuel for this fire, the pet humanization wave. So what's the huge trend that's powering this entire business? Well, it's probably one of the biggest, most unstoppable consumer shifts we've seen in decades. I mean, just look at that number, $157 billion. That's what we're projected to spend on our pets in the US alone. And this isn't just because there are more pets running around. Nope. It's driven by something much deeper, a huge societal shift. We don't just own pets anymore. They are straight up family members. And believe me, that changes everything when it comes to spending money. And this slide just nails it. We've gone from pet ownership to pet parenthood. Think about it. Back then, it was about basic care, and spending was, optional, discretionary. But now, we see them as family. We demand premium, human-level healthcare for them. And that spending is now non-discretionary. Seriously, studies show people will cut back on their own stuff, vacations, dinners out, before they skimp on care for their pet. And that right there is what makes this market so incredibly resilient, even when the economy gets rocky. So, this all sounds like a great story, right? But as an investor, you gotta see the proof in the pudding, or in this case, the proof in the numbers. So let's check out the financials. And wow, the numbers do not disappoint. Just look at that top line, total revenue. It's a steady march upwards, right? Consistent, predictable growth. That's exactly what you want to see. But here's the real kicker, the thing that gets investors excited. Look at the margins. Gross margin, operating margin. They're not just high, they are actually getting better over time. That's the magic right there. It's proof that as the company gets bigger, it's also getting more and more profitable. Okay, this next chart is a bit more technical, but it's super important. It's called Return on Invested Capital, or ROIC. Basically, it's a report card for management. It asks, for every dollar you invest back into the business, how much profit do you spit out? And IDEXX gets an A+. We're talking almost 30%. That is an absolutely elite number. It means they are incredibly good at allocating capital. And you can see they're running circles around their biggest competitor, Zoetis, on this metric. Now, this is fascinating. Check out this paradox. Recently, the total number of visits to the vet actually went down a little bit, by about 2.5%. So you'd think that's bad for IDEXX, right? Wrong. Their diagnostic revenue per visit surged by 6.5%. So how is that possible? It's because vets are running more tests and more valuable tests on every single animal that walks through the door. This is maybe the most powerful proof yet of that whole pet humanization trend. People are demanding better care, and IDEXX is there to provide it and charge for it. Okay, we've talked about the model, we've talked about the market. It's a great story so far. But if you're an investor, you're always looking ahead. What's next for IDEXX? Where's the future growth going to come from? Well, they've got a pretty clear roadmap with 3 big growth engines. First, you've got the innovation pipeline, which is just humming. They've got a new AI-powered cellular analyzer called InViewDX, and something that's a potential game changer, a cancer detection panel. We'll talk more about that in a sec. And third, they're looking overseas. There's a huge runway for growth as they expand internationally, where they're still just getting started. And let's just double-click on that cancer test for a second. The potential market for this single new product, this test that helps vets detect cancer early in dogs, is estimated at $1.1 billion. That's not revenue for the whole company. That's just the potential market for one new product. Think about that. For an investor, that's like discovering a whole new oil field under your property. It's a massive, massive opportunity for a new layer of growth. All right, last section here, the investor's watch list. So if you're keeping tabs on IDEXX, what numbers should you really be focused on? What are the vital signs? Okay, here are the big 4. First, you've got to watch that recurring revenue from the companion animal group. Is it still growing strong? Second, placements of new instruments. That's your crystal ball. It tells you where future consumable sales are headed. Third, are those operating margins still expanding? Are they getting more profitable? And finally, free cash flow. Are they turning those profits into actual spendable cash? That's the ultimate test. These 4 things, they'll tell you almost everything you need to know about the health of the business. And that brings us to the big question, the one every investor has to grapple with when they look at a company like IDEXX. There's no getting around it. The stock is expensive. It trades at a premium. So you have to ask yourself, is that premium a red flag, a warning sign telling you to stay away? Or is it just the price of admission? Is that what you have to pay to own a piece of a truly world-class business that's built to win for a long, long time to come? That's the debate.